Hello everyone and welcome to today's No FOMO Charts weekly live stream video. Today is Saturday, January 17, 2026. It's about 9 o'clock p.m. Eastern Standard Time. Welcome everyone. This is a swing trading and investing YouTube charts channel. This week we have earnings season in the USA part 2. A lot of companies releasing earnings. My focus, I'm primarily focusing on Netflix, United Airlines, Johnson & Johnson, GE Aerospace, Intel, Capital One, and more airlines such as Southwest Airlines and Alaska Airlines as well, PNG as well. For news and economic data, this entire week we have World Economic Forum annual meetings. President Trump is also scheduled to speak. Final GDP data, core PCE price index data, very important. Unemployment claims, consumer sentiment, and inflation expectations. Recent news. In the USA, this coming Monday, January 19, 2026, is a national holiday, so the stock market is closed on that day. Earnings season continues. World Economic Forum meetings are for the entire next week. Recent news, President Trump proposed a 10% cap on credit card interest rates. The credit card industry has a deadline of January 20th to comply. China recently blocked NVIDIA H200 AI chip imports despite US export clearance. So China blocked the imports of NVIDIA AI chips recently. For crypto, the USA Senate Banking Committee delayed its scheduled markup hearing for the Clarity Act, which is a crypto regulations bill. And Coinbase CEO said the crypto industry and Coinbase is working on several ideas and deals to help the community banks inside of that bill. So today's schedule itinerary, we're going to do stock indexes, stock charts, crypto indexes, and crypto charts. So this live stream video, I'm going to do less educational, less opinion, and just more charts back to back in a row. So let's start with SPY. SPY. S&P 500 ETF. We're still in this daily uptrend for almost 9 months now. The trend is still up, although we're starting to tighten and coil above this resistance zone here. 692. 695 is our resistance in the blue line. I'll put a horizontal marker there. 695 is our resistance. Our immediate support below that is 685. On a daily chart, I am seeing a small head and shoulders. Almost looks like a small little double top on a 4-hour. On the weekly chart, we have a doji candle from last week. We're not at any extreme on a weekly chart in terms of volatility. Same with the daily chart. So this is going to have to go intraday in terms of finding the actual direction or news breaking over the weekend. Perhaps though it's slightly more bearish because we had this lower high on Thursday. And part of the reason is bank stocks, finance stocks, and even some tech stocks had a sell-off in red. And some of that data from last week was not that great. Some of that jobs data as well. So that's where we stand with SPY. We are not at any relative dip spot, in my opinion, right now. So for me, if I was forced to buy SPY, or if I had to this year, I would not buy it at this exact spot because it looks like the technical charts wants to go down. However, in terms of the price, however, the earnings is about to release for all these companies that we just talked about, and that could definitely change. So I want to explain quickly the reason why you don't hear me say buy now or sell now is because I have a very specific strategy or set of strategies that I use for SPY. And I don't typically buy off of the 12 EMA. I'm not that short term of a trader. I like the 50 EMA, 100 EMA, or 200 EMA. Maybe the 20, but we're not even at the 20 yet. So that's why you're not hearing me say any buy or sell signal. Let's go to QQQ. NASDAQ, as you can see in the yellow, we still attempted to break out of that resistance of the price on the top side of the trend line, still coiling in my opinion. We're tightening up into this wedge. Potential little baby head and shoulders there. Looks like the market is getting a little spooked off of some price action or selling off of news. But that resistance rejection was below 630. The support to downside is at 614. And if we don't meaningfully stay above, let's say 617, and try to rally, we could actually pull back down. So symmetrical triangles do not guarantee that we're always going to go up. We can actually fail the pattern and go down as well. On the weekly chart, we've tested this resistance zone of 629 for about 4 times now. On a 4-hour chart, we're still in the uptrend. That's why you're not hearing me get extremely bearish, because the price is still technically uptrending, but it's more consolidating below resistance, in my opinion. It's not a strong uptrend. It's going sideways technically. Something to just watch out for on tech stocks in the longer term mindset. DIA, Dow Jones. DIA, we are also in the longer term uptrend. Resistance is below 496, support above 487. It's important because we need to have those levels to watch if we're going to have a breakout or a breakdown in the price. Still in the uptrend. Weekly chart, not at any extreme for now. Printed a very small doji candle last week. 4-hour hitting that resistance again of 498. Somebody taking their profit right now. It could be an algorithm as well for Dow Jones. IWM, a little easier to see here. We broke out of that upper trend line resistance. And this one was a little bit more extreme in terms of linear regression and Bollinger Bands. In this blue circle I highlighted, we penetrated above the top upper trend line resistance of the linear regression and the Bollinger Band. So algorithms know to take some of their profit in this zone below 266 and 267. Effectively, we went from the low Bollinger Band daily strategy to an upper Bollinger Band strategy, and that volatility was 8% bottom to top. We went from low stochastic RSI to high stochastic RSI as a short-term trade. So statistically, we should have a very small pullback at least, unless the news breaks and changes over the weekend. Something could, breaking news on Sunday or Monday or Tuesday, definitely possible. But the retrace of this, if we just put up a Fibonacci here, the first 236 level would be about 261. On the weekly chart, still nice bullish engulfing. But on the 4-hour chart, at least 2 days of consolidation sideways on that price. Speed up a little bit here. We'll go to gold. Okay, so for gold, I want to make it clear to anybody who's interested in gold that once, for example, my scanner or my charts shows that there's some bearish momentum forming, it could be a very short-term bearish pullback. We could definitely still get continuation. So it's to me, it's a warning sign. It's like a yellow light or a yellow sign, which in America generally means warning or caution, yellow and orange. So what I'm seeing is, I'm seeing it happening again, a very small bearish momentum forming on the price. You can see on this RSI, it's not as extreme as October 2025, but I'm expecting at some point a small pullback to one of the EMAs. We could pull back as far as 408. And then institutions and hedge funds, everyone's just playing this EMA bounce. It's a strong uptrend. Everybody knows when you're a really strong uptrend, you just buy the dips, which are 20 EMA, 50 EMA zones. So right now, the 20 EMA basically is our support level. So if we ever drop down to 410 or 408, I'm assuming somebody's going to keep trying to buy that until it starts downtrending. There's going to be one dip that fails at the end and could be a lower high. Once we start crashing, you're going to hear that on the news. But the volatility is going to be plus or minus 6% for that to happen. But we are not at any extreme. That for gold in this current past rolling days of 100 days, it would have to be around the 450 area to be extreme. And on a weekly chart, I don't see, there's a potential slanted double top, but unless that actually happens in real life, people are probably not that scared. But it's towards the top side of gold. We're not at any significant support zone right now. Let's go to silver. Silver, you could see it. Once I put up the Bollinger Band and linear regressions on silver ETF, we're seeing the resistance that we rejected down from $85. That gap down fill hit the top of that linear regression line perfectly. It's kind of interesting to see the indicators working so perfectly. $78 is our support level. Same thing with silver ETF in terms of I'm starting to see bearish momentum on a technical price chart, but that does not mean all the investors in the world are going to be bearish on silver right now, because I am seeing increase in price for about a month, and the decrease in the RSI for several weeks now, almost a month. But the stochastic RSI is not at an extreme. The price is, however, for now. But I remember I'm telling people on my stream that my charting style and my system usually warns me about bearish momentum and bearish pullbacks early. Same thing with bullish momentum and dips. I get signals and scanners that are telling me very early. So silver could eventually go up to 100. It's already at 81. We went from $40 to $80 silver, and there's plenty of good reasons for that fundamentally. But in terms of how do I know this is going to end? I need to see some kind of extreme pattern on a weekly chart. So a double top or a head and shoulders or an extreme looking shooting star type of pattern. It's not happening yet, but it is not at a relative support level. We'll just say that on a weekly, not at a relative support level. So we're at a relative 4-hour support dip, but on a weekly and a daily, it's not at support. So just watch out for that. I personally like buying if we just look at the EMAs. This is my 12, it's hard to see, but my sky blue EMA is my 12 EMA. My pink line is 26 EMA, just to use different colors. So when 12 and 26 for short-term trades are wide open like this, everyone's buying that EMA. Once we violate that EMA to the downside and get some kind of downtrend going on, that's what we want to watch out for. When we lose the 20 or we lose the 26, then we know we have a problem. I'll speed this up. Oil, USO. Price actually tried to reclaim the 200 EMA and we're pulling back now. When I see a chart like this, I have to actually rechart this because almost looks it's going back and forth in terms of the range. There's no clear defined trend, although it's consolidating. If it is a trend, symmetrical triangle sideways is what I'm going to call it. It used to be in a massive downtrend in the pandemic. Then we had a reversal uptrend, and then it's been basically range bound between $83 and $63. So we found the support at 66, resistance at 74, but you can see it's inside that larger structure of the symmetrical triangle. And in terms of short-term trades, there was an opportunity that passed in terms of using stochastic and bullish momentum. So I'm personally not going to buy US oil until there's some extreme signal with a higher chance of reversal, unless there's breaking news. UNG, natural gas. So you can see natural gas, we can see that the trend is still down, even though we had this short-term bearish dead cat bounce, which means a rally inside of a downtrending structure. We're still in the downtrend starting from November, and we lost this support trend line. All of that is not good. The only good thing that I can say is that it looks like somebody might have gotten stopped out because, or just somebody's aggressively shorting because the selling volume is way above average, very above average. And that's happening at the bottom of this loss of support. So I'm actually starting to, this is just my guess, but it looks like somebody shorted and stopped somebody out, large position. We're in the downtrend because I believe if somebody was going to put a massive short, they probably would have done it here in December or in this rejection of the EMA. Having it happen right at the bottom here is actually kind of suspicious to me. It doesn't always mean if there's red that somebody's shorting or got stopped out. It just means that for me, why am I suspicious about it is that even though we're in the downtrend with the death cross, is there's actually early signs of bullish momentum because this price is making a lower low and my stochastic and momentum oscillators are making higher highs. So this does not mean this is the bottom of natural gas. But if it starts going sideways for me, makes a double bottom, upside down head and shoulders, or uptrend reversal, then I'm actually might re-enter. But I need to make sure that I'm not buying a rejection down. I need to, if I'm going to play aggressive, I need to make sure it's extreme so that there's a very high chance it's going to bounce back up for me. Okay, let's finish up with some individual stocks now. I'll try to go faster. Apple, I just want to call out just some basic price movements in Apple stock. Use less indicators. So Apple's still in its downtrend in the price, kind of struggling here. Apple, even though it is in the golden up cross, but the recent price action in the news was not that great. Heading into earnings, which happens on January 29, which is about 5 weeks from now. So if it's going to keep downtrending, the next actual level down would be 244. What I like about this chart is that the good and bad. The good is the oscillators are getting low, so there is a technical chance for a bounce because the RSI is actually down. Apple RSI has not been below 30 since April 2025 crash. And so the 200 EMA could be an interesting spot. Maybe the bulls might want to fight there in terms of picking up, buying shares, or if the company can maintain their momentum until the price and earnings level hits here in the end of January. Let's go down to Microsoft. So this is what I'm saying with these tech stocks, even though a lot of people are excited about AI still and NVIDIA chips. If we look at the actual stock price of Magnificent Seven stocks, it's actually still downtrending. So that double top that I called back in November was definitely the top of Microsoft. And I didn't really buy anymore because of that. And it's downtrending. We lost the 200 EMA. It's actually at risk of a death cross. The 50 EMA almost touching the down crossing below the red 200 EMA, but that will take several months. It needs to go way below the price to actually get the death cross. So if earnings are bad, I would say Microsoft on January 28, 29, heading into February could be at risk of a death cross in the EMAs. Company financials does not approve. NVIDIA. NVIDIA still hesitating. I still see this larger head and shoulders type of structure in the price. Although in the short term, we had sort of like cup and handles or double bottoms. But the fact that the good and bad, the good is we bounced off of 180 support and we haven't crashed down below that. If we crash down below 170, we hit 166, then we're in trouble. We're still technically in that golden cross, a very slow lagging indicator. Next earnings is on February 25th. So NVIDIA has almost 1.5 months to try to maintain their price. But this head and shoulders, I'm not that scared of it, because if it was a lot higher in the air, such as up here, and then the EMAs are down here, then I would say, okay, there could be a potential for that crash. But we're still on around the weekly 20 EMA, which is around the 180 zone. So I'm not really scared, but if they can't on their earnings, and this goes for all tech earnings, if we have some kind of earnings miss on the EPS or revenue, that's going to be bad, obviously, and probably we're going to see sell-off just like we saw in finance and bank stocks, where a lot of stocks gapped down 3-5% in overnight. So there's always risk of that. Google. Google, on a technical price chart, similar to NASDAQ, almost a little bit similar to silver, is that I'm starting to see early signs of bearish momentum. We're seeing the higher high in the price. And then here we go. We have a double top in the stochastic RSI is overbought. It's high. And then we're starting to lose momentum in the TTM squeeze blue histogram. And I'm losing momentum on the RSI as well. Even on the MACD, the green histogram is smaller. So we're seeing technical signs of bearish momentum. But the real question is, will the billion-dollar institutions sell Google? And for that to happen, probably they need bearish fundamental news, or an analyst downgrade, or a major bearish catalyst for that to actually happen. Look at the earnings. It was still good. Actually, Google's earnings in November were all exceeding expectations. So their upcoming earnings in February 4 will prove that. 311 is that downside support zone, 300 to 311. Let's go to Amazon. Amazon was one of the laggards in terms of making uptrend progress. So obviously you just saw Google was the big winner of last year with their AI. Amazon, however, to me, it's turning into more this symmetrical triangle in the blue. Honestly, that's what it looks like. And so in terms of that range, is plus or minus 6 to 12%. Earnings on January 29. Their EPS revenue last quarter actually increased. Wanting to see something big come out of Amazon. Hopefully they have some big news this year to really get the price moving in their favor for their company. But right now, the 248 level is that resistance on the top side. Let's go to Meta. Saw this quote about how Meta is possibly not popular, not the most popular Magnificent Seven stock, although according to websites such as Statista, data statistics, that Facebook social media is still something like the number 2 used social media in America, where YouTube was number 1. So let's not underestimate Facebook in terms of what products they have, but in terms of trying to predict their earnings, right? Their last earnings, they had earnings miss, EPS miss, and then they're actually already in a death cross right now. So I'm not going to predict the earnings, but What I am going to try to do is try to predict a price move, because when certain technicals line up for a Magnificent Seven stock, and if there's no major fundamental catalyst to change the outlook of the fundamentals, then it could just be a technical support play. Somebody's going to do it out there. In terms of support play, there's trend line. We're near trend line support on Meta, and a lot of Magnificent Seven stocks are not like this, and for good reason. We have the stochastic low. The RSI is actually giving me a potential higher low signal. It's really up to their earnings to see if that holds. This idea will be invalidated and canceled if we lose 587 support level to the downside. Then the next level down would be 493. So that's something I'm watching out for. But we've already seen 20% gap down or rally down crash on Meta stock. It's happened before. Tesla related to this company, SpaceX, rumored to possibly have an IPO this year. It's Elon Musk company as well. Tesla is a little bit similar to Google in some sense in terms of the trend. You can see if I draw one trend line, we're actually near the support zone. So somebody took some of their profit at this top side around 494, and we could see I'm marking the blue, we're at the fourth support zone. We had 3 resistances on the top. Somebody might be thinking long-term Tesla play and I do not advocate for buying before earnings, because anything is possible. If one marker is bad, or half of the fundamentals are mixed, or if there's something on that earnings call or something about guidance, there can definitely be a gap down. So I don't really play earnings before. I play at a minimum after it releases. That's just me. But on a weekly chart, let's look right here. Starting to lose a little momentum on the weekly. There's some technical selling there. And if I put up a Fibonacci from the bottom to the top of this move, if Tesla, for me, for deep value, I like 317, 351, and 383, possibly even 428 for a small little trade. But if one of these support levels fail, that's how we know maybe it's time to sell. Let's do 2 more. AMD actually has this interesting, nice little upside down head and shoulders, which broke bull. And if we draw a trend line, it was close enough to that trend line support. So this is what I'm saying is, if I slow down and do charts and I show people, at some point the stock comes down to some kind of relative support level. If I drew this line 6 months ago or last year, right at the August move, we had the gap up, and it took essentially 3 to 4 months, or maybe 2 to 4 months, for it to hold back down to the support gap. And then we had some news about AMD making more AI chips in CES conference. So holding the support level of 200, that's probably some institution just buying more AMD on good news. They have earnings on February 3rd. And interestingly enough, that last support level matches with the low stochastic. There was a squeeze as well in December. So that's why I'm always on the lookout for low stochastic. I don't like buying high stochastic stocks, because that means intraday it's high, the price. It's very simple for me. But it looks scary, meaning it looks like nothing is happening. For example, this is pulling back, but we start to go sideways on a double bottom support. And once this low stochastic starts building, I have to get into those types of stocks. Same thing with Intel. My initial buy on Intel was $22 off of the news breaking. So that's my style. I'm aggressive and I buy low in terms of, I shouldn't just say low. I buy support consolidations. Intel was consolidating for 1 year. There's a lot of time to try to figure out, am I going to buy Intel or what's going on here? And then when the US government took a stake, that's exactly somewhere in like August. That was the first buy spot, and then I traded the rest. So Intel, this is what we're looking out for. Support consolidations. There was almost like this cup, small little baby handle. And if that's true, we should keep going, possibly 50+% long term, but we're heading to earnings this upcoming Thursday, January 22. So we have to see, what are they going to report? Will they actually beat expectations? EPS, revenue, and net income, they'd be very important. Daily, we're on that the golden cross, not a death cross, golden cross. Weekly chart, something we want to watch out for is we have a shooting star here. So in terms of value, it's not a support value play right now. On the daily, you can see we hit the upper Bollinger Band, almost tapped that upper linear regression zone. So almost looks like it wants to pull back actually to this resistance spot, $43. That was a long first half of stocks, but I like doing more charts. Let's flip to crypto, and I'll try to go faster to end the stream. And in the future, my live streams will not be as long. I'm trying to streamline and be more efficient as the format changes over time. And there's still a possibility that if nobody because I have YouTube analytics, if nobody even watches past 10 minutes, I might just change my videos back to just like 5 minutes or 10 minutes, because there's no point if no one is even watching past a certain amount of time, or there's less point. So in other words, if 90% of people are just watching 5 minutes, I'll just make 5-minute videos in the future. But for now, I'm doing these lives. Total crypto market cap, the index one. I want to remind people that I was telling people all the way from November, December to January that we are in a consolidation going sideways phase. And after a downtrend, if we go sideways and we don't drop and get rejected right here at the end of December, if this doesn't happen and the price doesn't go sideways, there's only one more direction the price in the short term could probably go, and that was up. That's why I longed Bitcoin on January 3rd. January 2nd, January 3rd, right after New Year's. I saw, wait a second, we're breaking, here we go. And then how did I know not to panic sell here? Just experience. First pullback, that's actually a buy spot. That was a buy spot. But now, we're still death crossed. At the end of November, we're still death crossed. This symmetrical triangle, which I'll draw here, is still, actually it was more like a descending triangle, but still in play. That's a 10% from the breakout. 10% would take us to 3.37 trillion. And it's slow getting there because the Clarity Act, there's not that many fundamentals. It's honestly, social media changed and people are doing more prediction market trading or betting or gambling. There's sports betting is popular. There's gambling is more popular, just regular gambling. And then prediction markets, which is still, to me, sort of a little bit more like gambling unless somebody really knows industry or information. Crypto, after this downtrend, just lost popularity. Just people not interested in crypto right now. But for me, that's sometimes the best time to buy, because after the price crashes, then everyone quits. But that's actually where I need to buy, which I did. So we're still in this uptrend. We need to hold above 3.1 trillion and 3.0 trillion, definitely. So the risk here is that even though I'm all excited about the bounce to the upside, is that we have not actually tested the 50 EMA since early January. So we could actually pull back a little bit more to that 3.11 trillion, and then we have to try one more time to try to rally up to 3.3 trillion, which is that 200 EMA. Weekly chart, I'm not seeing an extreme, except we did kind of flash gap up or flash rally up to the 20 EMA. So this is just me trying to talk to myself now, be more patient, no FOMO charts, because I could accidentally, right, if I exit right now, if I just wait a month, maybe I'll actually keep going higher. So that's why I have my stop loss line in the sand that if it goes down, I'm willing to only take less profits. It'll still be profit, but just less profit. Total 2, same thing. The death cross printed, we symmetrical triangle sideways, we broke out, but then now we have this temporary problem, the double top in total 2, below 1.33 trillion. So we need to not crash below 1.24 trillion. If we go to total 3, very similar, double top below 926 billion, 864 billion support. Let's go to others. And I saw this funny chart on social media, Instagram, that somebody said, who knows, right? This is others. This is basically all altcoins. If you draw a mega trend line, let me go to logarithmic. Actually, if you don't do logarithmic, and we connect trend lines from all the way down here, we connect it down from 2023, there's actually a chance. What if this is the support level for altcoins? That would be very interesting in terms of if this is our big pivot point on altcoins right now. We could still crash. We could have a double bottom, but then I could see the support level has been holding for altcoins when we get down to this 196 billion level, which we did. Even though there's a giant head and shoulders right now, we actually just bounce off the neckline, so it's not game over yet. We have to have a massive crash down for all altcoins to make this bearish prediction true. But if this is actually writing a trend line, there's a small chance we have all this open space. That's why you're hearing rumors, whispers on the internet of a potential super trend, super cycle for crypto in 2026, is that if we were at all-time highs, people would not say we're going to have super trend, super cycle this year. But because altcoins, some of them bottomed out, some of them, and we're trying to save from going to death cross, that's why there's a small chance we could have a rebound. All right, let's finally get into Bitcoin. What I'm going to do for crypto in this video, I'll do Bitcoin, Ethereum in detail, and then I'm just going to go real fast for the rest because I missed some charts last week, and I'm sure people were not happy about that or not excited about that. Let's go to Bitcoin. Bitcoin USD. Very similar analysis where we had a downtrend into a consolidation triangle, and patience is the key here. Now, this consolidation triangle, if we have a 10% breakout, which we almost made, that should have taken us to about approximately 98,000. If we do double the target to 20%, we should go to 108,000 this year if we're going to uptrend reverse. It is possible, however, we have one of these scenarios, not exactly, but we have a dead cat bounce and we crash one more time. Right? Someone could argue that already happened. One rally bounce, crash one more time. Before we have a catalyst, right? We need a catalyst. We're still death crossed in Bitcoin. So to get out of here, we have to have the price go above all the EMAs, which means AKA Bitcoin price has to rally over $100,000 and stay above $100,000 for the whole year of 2026 for us to continue a super trend for Bitcoin. Weekly charts. Nice double bottom off of 88,000. Remember about 2 weeks ago I was saying Bitcoin holding above support at 87,000, then I longed. I bought. Still holding. 4-hour chart, beautiful. This was the play, remember 1 or 2 weeks ago. Potential 4-hour golden cross. I like that Bitcoin's on the 200 EMA. We had that nice rally up bounce. So with the stochastic still now in the low zone, I'm not panicking because some algorithms actually might buy again. But we need maybe a small little baby flash crash. Maybe we'll flash crash down to 94 or even down to 91,500. Get that technical reset of the stochastic RSI, have the price go sideways. Price go sideways, and then try to rally one more time. That's how we're going to try to get to 100,000, unless there's massive bullish news. Ethereum, I like it. So once we have these MACD histogram plays, it takes about 30 to 45 days for the price to actually move. And it just takes time. Sometimes it takes months. We saw here, for example, when's the last time we reclaimed the 50 EMA to get to the 200 EMA? In this particular case, it only took 1 week. But if we look longer, see it takes like 30, 40, 60 days. So let's just pretend if we're going from the bottom to the EMA, it could be anywhere between 30 to 90 days. That's 1 to 3 months. If we hit there, we're already 60 days in. So the next month or two will definitely show us, are we going to have some amazing gains in crypto? Are we going to keep rallying here, or are we about to just crash, right? Because it could go both ways. Crypto is not safe. Is crypto safe? Crypto's popular, but it's not safe. It's volatile. So I want to watch out we don't have a long squeeze, because if everyone longs here and they get stopped out, we could have capitulation back down to support of about 2,900. Definitely need to stay above 2,700. XRP holding support above $2. So we had the flash, which I played. There's 925% volatility from bottom to top, $1.82 to $2.35. But we're fading down in XRP right now, and there's not enough regulation clarity in the Clarity Act, or Ripple hasn't been officially selected as any partner yet. There's just so many rumors right now that maybe the banks might create their own token, or are they going to pick Solana? Are they going to pick Ripple? Will XLM ever get picked? Stellar. So just be careful of this, that because we're not rallying continually, we could actually flash crash one more time. I would not be happy if that happens, if we flash crash. I would be very happy if we have a secret double bottom continuation. That would be the greatest bull move up to 262. Let's do Solana, then we'll go faster. So I'm doing these slower because they're such important coins. Solana and that death cross still downtrending. We have the first potential trend line, true trend line breakout, and uptrending here above $1.35 and $1.40. This particular area, $1.40. So I could draw a trend line here in terms of trying to find support levels. I'd call it my trend line cascade. I just keep drawing support or resistance and trend lines until the pattern emerges for me. So what am I talking about? I drew 3 support lines, essentially resistance, and then 2 support lines, and then 2 trend lines. And I could see if I lose this first trend line, maybe we're going to hit 140. If I lose that, next target down could possibly be 134, then possibly 126, then 118. I'm always being aware of potential downside risk. But as an investor, since transparency, I bought around in the upper 120, maybe I bought at 130. So I'm okay. I have some little cushion here for price to move around, but I don't want to hold and let this turn into some kind of massive loss. The only thing is it's going to take a while because the hype of crypto it's gone right now, in my opinion. The last time Solana had a negative 60% crash was 1 year ago. Basically, we had a negative 50% crash, which is similar. But what's the visual pattern that I'm seeing? I will point an arrow. This arrow, price action, to me, looks very similar to this price action in April 2025. So I hope we don't have another tariff crash or some kind of government legislation, fundamental major change, although we're having FOMC change in a couple months, in May, apparently, or June. So that's why I'm still holding, because as a trade, if I just auto sell if I panic sell at every small red candle, that's not good trading. It's not good strategy. Excuse me. If I bought at 130, for example, $130, and I had a 10% stop loss, and now I don't need that anymore, what's my target? First target would be around now, 142 or slightly higher, which was the top 150 and people sold. So I need to target and try to see if I can lock in 20% and have a minimum stop loss of say like 5 or 10%. But I'm not tightening my stop losses so much because I don't want to get auto kicked out of my trades too early, which could definitely happen. It's called stop hunting. Market makers, algorithms do it all the time. They know our orders are sold to market makers for crypto and stocks, so they know where did everybody buy. They know where everybody bought. They know where they can generally guess where everyone's stop loss is, somewhere around here in 105, 110, or 110 range. What I like to see is, even if it comes back down to 137, that's going to spook some people and scare them, but I want to see some follow through. That's what I'm saying. Follow through to the upside for Solana. Let's get it to 150. Let's get it to 160. Let's even get it up to 200 and then pull back down to 160, fake everybody out. And then we need that golden cross. That's what we need. But I want to make it clear that my swing trading strategy is aggressive. I get in relatively early when it seems wrong to most people. When you might be wondering, okay, so what's the safe way to buy stocks for crypto? Well, we want to see a daily chart, a 1-day chart, golden cross, or an uptrend. Golden cross for indicators, or uptrend for the price. And then I could try to buy some kind of support and then just play that single leg trade. So from that strategy of golden cross uptrend, that's not happening right now. So very, very conservative investors or traders are not even touching crypto right now, probably. Aggressive traders, we are touching crypto right now. We're trading. Okay, as promised, let me do the rest of the rapid fire, and then we'll close out. Zcash. So I have to just say, privacy coins are still popular because Bitcoin is still being monitored by exchanges and the government and tax entities. And in the EU, European Union, apparently on January 1st, 2026, there's some kind of new law where crypto exchanges and wallets must be reported now. Cannot hide crypto money, apparently. So it's almost like what in America, we have something called KYC, Know Your Customer, and the IRS tax entity of America. Well, basically, the crypto exchanges have to report IRS gains or losses from crypto exchanges to the IRS tax entity. So apparently to that news, EU, if people have to either report or their wallet and their holdings is now visible to government, crypto exchanges, and tax entities, crypto's not private. Crypto's not invisible. They're going to be able to track which wallets are going from A to B, basically who sent it from A to B, and how much money it was. So they have access to that now, agencies. So then the idea of privacy coins is very attractive since last year. But Zcash, all of their developers quit. So Zcash was not that popular heading right into 2026. What was more popular? Dash was more popular. We just had an amazing rally, And I didn't get to this chart last week, but this is what I'm saying. The 4 charts that I look at every day, besides Bitcoin, Ethereum, XRP, and Solana, I look at Zcash, Dash, Horizon, and Monero, XMR, USD, sometimes Tau, but XMR, which is not here on this list yet. Let's add it. It's at the way bottom. So it's at the way bottom. They had a terrible 2 days taking their profit. So let's go back to Zcash though. Zcash, why I'm not extremely bullish anymore is because all the developers quit. So maybe the project is not really going to progress that much. And the developers might be making their own coin, if I read the news correctly. So the big support level I'm watching out for is 367 and 300. If we lose both of those levels, Zcash is probably going to crash or pull back hard. Dash. So Dash, why did this have a massive rally? Well, first off, double bottom off of where? 200 EMA zone, or even like 300 EMA zone. So with crypto, that's why I'm always looking. There's that, what's the hint there? Stochastic RSI, momentum building, higher low on the RSI, double bottom, 5 signals to buy. 6 signal was the fundamental where Zcash developers quit. So therefore, their competitors are going to do better than them. We had a beautiful 150% rally. And then the shooting star turning into the bearish evening star pattern. So privacy coins are selling off. You saw even in, let's go to Monero. Monero had a beautiful, this is what I'm saying, when you have an uptrending coin or stock and it hits support on certain levels, like 50 EMA, 20 EMA, and it's low stochastic, and then you get that fundamental change of Zcash developers quit. You had a massive short squeeze. You had beautiful play, 75% rally. But this is crypto trading. Some people are doing here, and shorts are gonna, whoever got short squeeze out is gonna aggressively short it back down. That's my theory about what's happening now. Is regular people, I think, would not be panic selling Monero. Whoever got pushed out of their position here is trying to make back some of their profits right now, and they're probably made back maybe half of it if they're doing this much volume. Or it's just an algorithm controlling a market maker. So this was like that RGTI play I was talking about. Just right after 50 and you get some momentum, you get some explosion in the price. Let's go to Zen. Horizon, another alternative. This is kind of a big volatility here happening in Horizon, 15% up or down. But I actually longed Horizon, and I might take my profit. It depends on the situation. But for me, please don't copy my trades because I am working on a particular strategy and skill set of mine where I'm working on holding my trades longer, even if I have potentially less profit. Because sometimes too much frequent trading in some of these altcoins, if I just hold a little longer, I might actually capture a little bit more of the move. That's what I'm trying to work on personally. But sometimes when you're in a downtrend, if you buy at the bottom and you hold too long, it's just a downtrend dead cat bounce and then it crashes back down on you. So I still need to have my general stop loss level. But why I bought Zen off of that Zcash news is I liked Zen because of this upside down head and shoulders that I saw. It's a big pattern. Dash was great because we had the double bottom. So those are the exact 2 patterns that I love buying for crypto. I'll draw it for you. It's a double bottom in the support price, right, in a line chart, or it's an upside down head and shoulders type of structure, and you might even retest the neckline and then go back up like that, or just regular upstairs. So there's 3 patterns. So this one you can obviously see there was that at first initial upside down head and shoulders pattern, and the measured move was about 35%. We hit the first measured move. Can we hit measured move number 2, which is really high, which would be about almost $17? So this shooting star into an evening star is not looking good. We can retest 962 or somewhere around there, and then we're going to try. But if Zcash keeps crashing, you need to watch out for that because some of these altcoins actually might just copy Zcash and just crash because everyone realizes They're still projects. Let's go to Tron. So Tron apparently also has, they had like a merger with a real stock company. So Tron Crypto actually has its own Tron stock, if I'm not mistaken. So Tron, why did I like this? I didn't buy Tron, but I should probably trade Tron in the future more because pretty solid project. And when the trend line breaks out like this, there was this triple bottom here, this upside down head and shoulders. So when Tron usually bounces, it's not the biggest bounce, but I get at least like a 10%, maybe 15, 20%. So looking to see if that's going to keep continuing or if we're going to pull back not to the 30-cent range. Dogecoin. So this is what I'm saying. What's popular right now? And same thing with stocks. What's popular right now in stocks and crypto? Is Dogecoin better right now than Dash? Is Dogecoin more popular than HZen or Zen Horizon? Is Doge more popular than Shiba Inu coin? Right? So that's why I did not on purpose, I did not buy Dogecoin because I just knew it's not the popular one. Monero is way more popular than Dogecoin right now. Dogecoin is just a dog coin, literally. I still love Dogecoin, the original dog meme coin. But in terms of momentum, people will only come back to Dogecoin when there's a massive, large, upside down head and shoulders type of reversal. It could happen still, but usually if we look at these structures, I'll highlight it. How long does it take for that to happen? 100 days, 60 days, 60 days, 30 days, 30 to 100 days. So approximately 60 days on average. It takes 2 months for daily price chart patterns to create in the past year. So if this is the bottom, December, it's going to take possibly Q1 of 2026 to decide what is the upside down and what's the price structure going to be. We're still in that death cross. Watch out for that. Although, if you look, I just want to give people hope here, is that once we reclaim the 50 EMA, that's when you start to see some of that big explosive action, either from a downside reversal or even a golden cross bounce setup, an uptrend. The 50 EMA is really that kind of flipping spot. Cardano. Cardano is not the most popular coin right now. We're in a death cross, downtrending, potential upside down head and shoulders. Just flagging to the side right now. I like that the momentum's building. It's actually fading. Momentum actually fading right now. But if we look at this weekly chart, what was suspicious to me and why I bought some Cardano is it's right at this weekly trendline support or just below it. And it's fighting right now. It's fighting. Cardano is. If Cardano can survive, if altcoins can survive, we know from history there is a chance for this large bullish bounce momentum. That's what I'm saying. If I'm aggressive, if I manage my risk and I buy at the correct spot in time, there could be a rally up to 50 cents. If we never go above 43 cents in about a month or two, then I'll start to worry because if we reject down, we could easily crash down to 20 cents, 10 cents. First time I bought Cardano recently was right at 25 cents. I played Cardano so perfectly. I sold at 75 cents. Then I bought again at 33 cents. And then I think I sold at $1.09 something, somewhere here at a stop loss. So Cardano, I like Cardano. So I'm trying to do it one more time for myself. If I buy at 39 cents and if this is a bottom, might not be the perfect bottom, but if I'm close enough, and then we have a super cycle bull trend reversal, we might go back up to the 90 cent range at bullish best case. Same thing with Link, even though Link is not the most popular crypto, on a weekly chart, I did see some kind of double bottom area. And when Link gets down here to this 200 EMA zone, that's where usually in the 1.5 years, we had a bounce. We're actually still in a golden upcross on Link. On the weekly. And then I just want to show you, this is exactly where, if we are going to have a bounce, it would be off of this general support trend line because it's strong for 1.5 years. That's one of the reasons I bought Link. AVAX struggling a little bit here. I'm switching to weekly charts now for speed. Only thing with AVAX is we're near that support weekly trend line. That's what I'm saying. Why is everyone so hopeful? Is if we hold support down here, look at all this room. As a trader, it's nice, right? If we go, if we that would be 100% to 200% gain potential if we have one more Bitcoin super cycle. Some of these coins. XLM, I bought some XLM just because it was right at that 200 EMA weekly. Sometimes in the past it works. Just for a small bounce. I'm trying to see what happens again. XLM. And so it seems like I'm doing things very casually, but I'm actually playing some of my strategies. I'm adding more indicators like stock RSI. A daily chart as well. There was a squeeze back here in January 3rd. And so for me, potential upside down head and shoulders at a bottom support level trend line for 1.5 years. That's an interesting spot for me. Shiba Inu is very similar to Dogecoin. We'll flip through these now. So a lot of crypto altcoins are actually death cross. So that's why I'm not getting really excited for people. Got death cross on a lot of coins. However, now somebody might ask me potential upside down head and shoulders on near. Now somebody might be wondering, well, okay, if we're going down, then where's the bottom for crypto and stocks? Where's the bottom? And when should I buy? What should I buy? Those are all questions an individual trader based upon their own research needs to decide. But for example, why did ICP, let's give some chart patterns to close out the last few minutes. Why did ICP have such a beautiful 50, 40% rally? Very simple. Price structure, double bottom. Uptrend reversal in the price. Momentum on MACD histogram and squeeze. Reclaiming of the 12 and 26 EMA. Small quiet volume. Short squeeze explosion to the upside. Let's rewind to Dash. Crypto. Is Kraken. Why did Dash have 150% volatility total? 130, 150%. Even without EMAs, you can clearly see double bottom in the price in the yellow box. So there's a double bottom there. We're not downtrending anymore. We're not going sideways. So then therefore, if option 1 and option 2 of downtrending and consolidation sideways is not happening, what is left? Morningstar, option 3. Somebody got short squeeze out there, or some institution saw it and believed in it, and they made a lot of money. Profits. Stochastic RSI is low, large squeeze. So this is for me saying I need to hold longer because my initial scanner was telling me Dash, buy Dash here, buy Dash here, buy Dash here, and then there's the fourth last one, buy Dash. So sometimes I'll buy in the second or third spot, and then that's where the real test of my mental fortitude happens. Can I hold for another 30 days when it looks like we're about to crash, and then we have the amazing flash reversal for myself? I had to wait quite a bit for that to happen. And then the third, so we saw double bottom right now. I showed a Zen upside down head and shoulders for a small upside down head and shoulders gain with the pullback that's happening right now. And then XMR is another example of a uptrend and then into an extreme sell-off. Extreme in the 750 range, and it's pulling back down probably to around the 510 level. That's what I'm thinking. But it's still, Monero is, look at this weekly, it's disgusting. Weekly shooting star gave all of its gains back almost. Terrible looking candle. But on a weekly chart, I liked how back in October 19, there was momentum building. So why am I showing this? Is for any crypto traders and stock traders, investors, a lot of times the hint about direction, the big direction, is on the weekly chart. And then for me, the daily chart is just fine-tuning an entry to get closer to a good average price, meaning that I don't really want to buy XMR up here at all. It's just too high. But I do want to buy XMR closer to these two spots or these three spots. And what spots am I highlighting? 20 EMA, 50 EMA, even 100 EMA, and then 200 EMA. If I want to make it even better, combine that with low stochastic. And for me, why I need to hold longer is I just need to train my brain. If I know that is the strategy for popular coins or popular stocks, then I just have to train myself to execute it better. So let's wrap up here. Thank you everyone for watching today's The FOMO Chart Stocks and Crypto weekly live stream video. I hope you liked this video. I hope you learned something. And to reiterate, in the future, I might go back to regular YouTube videos, like 5 or 10 minute videos, or I might do shorter live streams, one of those two choices for me. It all depends on YouTube analytics, because in reality, just expectation is nobody's really going to watch a 1 to 2 hour live stream unless you're trying to really learn hardcore or find some setups, chart setups. So in the past, most people only watch my video 5 to 10 minutes. So I might move back to that format. It depends on the situation, the data. Thank you so much for watching. If you like this video, go and click subscribe, click the notification bell, hit the like button, leave a nice positive comment, or request a chart for next time. And let's always remember to manage risk, manage our emotions, manage risk to reward ratios. And I will see you in the next video.